Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. Remember life, remember how it was. I'm cheap, Michael Jackson, all this shit. Say what up to Maggie, the shoe. Say what up to Penny. Say what up to life, I'm trying to running up my bikes, running up. Not for me, 18, still in granny 6. Take it easy, give me some sweet, bitch, I might like immortality. This is life, life, immortality. That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regardless, dear,
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 16th, 2023. And we are in a bull market. This is what a bull market looks like, okay? If you wondered, if you haven't been around for a bull market, you're new to crypto, you weren't here to feel what it felt like in 2019, I believe, and in 2017, and before, whatever the next, the previous bull market was. Actually, just a point of order, 2019 wasn't a proper bull market, it was a B wave, okay? 2019, 2020, I believe. All right, let's go to the chart, so I'm not just making things up. I'm referring to this right here. This is not a bull market per se. This is technically a higher high and higher low, but it's a three-wave move. So what do we know about three-wave moves? Is they're corrective. So this is why after that, you get this, okay? Same thing is happening in the stock market right now. You're getting a bear market rally. This is the definition, the technical definition of a bear market rally, where you're in a corrective sequence, right? Because this was the bull market and then 1, 2, 3 waves of correction. And obviously nothing goes up in a straight line and nothing goes down in a straight line, right? Technically speaking, nothing goes in a straight line. Everything kind of has intra-wave corrections. So this was the massive intra-wave correction of the previous bear market, and that, even though it was a bull market or bear market rally, you felt what it was like for price to go up 50 to 100% in one day and hundreds of percent in one day. You felt that. You know it's possible. And you remember, if you were there, you remember what you did, how much money you made, or how much money you lost, how you traded it or didn't trade it. You remember all those things. So it's with that experience that I basically told myself, that's the potential. I know there's a lot of potential in this space. I want to change my life. I want to change my family's life. I need to learn how to read these markets. I need to learn how to be better, to trade these profitably and take advantage of the trend, okay? So I basically buckled down and I learned for, years a system of trading, and not just a system of trading. I studied trading up and down. I used, my overpriced degrees, and I put them to use in a way that would make me money directly instead of, instead of asking for a job. I'm like, let me learn how to do this. So I'm going to read everything I can possibly read. I'm going to study. I'm going to think critically. I'm going to be skeptical, and I'm going to develop and I'm going to use, basically the scientific method to understand how to do this and see what works. I'm not just going to take anything for granted. If I learn something, I'm going to apply it. I'm going to backtest it. So it's with all of that I tell you, my friends, we are in a bull market. But again, that's my truth. For you to understand that and practice it and, do something about it, you have to know it. You can't just believe it. You got to know it, or else you're not gonna swing big. But if you swing big here, the question is now, right? More and more people are starting to wake up to the idea that we are indeed in a bull market. Then now what? How long does this last? When does the other shoe drop? So many people are so scarred from this move right here that they can't believe it. It's disbelief. Even if you're in the trade, it's disbelief. You're like, oh, this is too good to be true. It can't just keep going up. So the question is, how long does this last? That's what we're going to tackle on today's live stream. But so we went on a tangent, but that's fine. I do want to talk about the DXY. Okay, I was watching BitBoy. I watch BitBoy pretty much every day. except the weekends, right? And it's a great live stream. It's entertaining. Okay, I don't go to BitBoy for technical analysis. I just go to BitBoy for a general overview of the cryptocurrency space. Okay, and what everybody else is being exposed to. The biggest account in the whole entire space gets the most eyeballs. Okay, so what BitBoy is saying, most people are buying, most people are also in agreement with, or kind of most people are also thinking, right? And BitBoy, he says a lot of things that are correct, but this one thing he said this morning, I completely disagreed with. And he said Bitcoin is not attached to the stock market. I agree with that. And he goes, it's not even attached or correlated with the DXY. It's decoupled from the DXY. And this is the problem, my friends, of being too myopic, being too zoomed in. We have really good data, right, that I show all the time on this channel. If you want to verify this, just pull the chart up yourself of Bitcoin and the DXY from 2014. That's as far back as it goes. And you can see they're almost exactly, perfectly, inversely correlated. Just because the DXY ran up on the hourly time frame, right, for the past few hours, right, it went up, doesn't necessarily, and Bitcoin was going up at the same time, doesn't necessarily mean that that inverse correlation is broken, okay? This is the issue with being too zoomed in. Guys, please, for your own sake, zoom out from time to time. You need to do that. That's one of the most useful things I learned. I remember actually when I figured that out. I was in some trades and I was reading properly, and my reads were good on the small time frame, and I was trading that. But then I didn't see the larger trend, so I was trading against the trend. And once the trend resumed, I got smoked. And I was like, shit, how'd I miss that? And I remember writing in my trading journal, dude, how'd you miss that? The obvious trend was the opposite way. So if you are counter trading, you should know to take profits super early, to be super conservative, to set your stops tight, all that stuff. But, you got smoked. And in the counter trend, I was like, I was treating it as if it were the trend. And I told myself, I remember in my trading journal, I don't have to reread what I wrote in my trading journal, because every time I write in my trading journal, I don't write like every day in my trading journal. I only wrote at that point in time. I don't write in my trading journal these days. While I was really developing my, honing my craft, if you will, I remember writing every time something happened that hurt, or something caused something happened. Either I lost a trade, or I won a trade, or some confusion, or some epiphany. It caused an emotional response. And because it caused an emotional response, I never forget. And I have hundreds of lines in my trading journal, but I don't forget anything because there's an emotional attachment, right? And I remember this one line. It was something to the effect of, do not counter trend. Do not counter trade, rather. Don't trade against the trend. It's not worth it. Because I was like, I'm not going to do that anymore. And I, even today, if I wanted to counter trade, I could. I don't care. Like, I've learned the rules, and I understand why I wrote that at the time. But if I want to break it, I can. But there's a way I would break it. I would break it in a really conservative, very careful way. There's a lot of ways you can counter trade. There's nothing wrong with counter trading. In any case, the takeaway for me from that was zoom the fuck out. And that's what I wrote. I wrote, zoom the fuck out. What are you doing? How did you miss this? You should have seen the larger trend at play. Same thing I'm saying here, my friends. Zoom the fuck out. Look at the larger trend at play. Okay? Let's go on the weekly time frame. Here you see the DXY is clearly in a downtrend. It's been in a downtrend since September. Okay? That's the larger trend at play. Okay? These past 3 weeks, the DXY has gone up, but in a counter trend. Okay? Trend, counter trend. Trend, counter trend. Trend, counter trend. This is why we study the tendencies of price action. Waves happen on a larger degree in one direction, and then intrawave corrections happen against the larger trend. But we don't freak out when they happen because we understand that they're a normal function of a wave matriculating to a certain target. So the DXY is in a downtrend, and it is at resistance. It's at this 80-day resistance and this 450-day resistance. And we've been saying that on the channel, that if you zoom in, you can really understand what's going on. Okay? There's another thing that's happening here. Let's go back on the weekly chart so I could show you that. There is this other trend line that is very clear, right? It's a trend line on the weekly time frame, and it's an important trend line that's going to be respected by the price action, because on the weekly time frame it is 630 days, approximately 630 days worth of data. So it's lasted quite a long time, and it has a lot of different data points. Okay, I know I repeat this a bunch on the channel, but it bears repeating, right? 1, 2, 3, 4 data points that this is being respected by price. You don't have to make this up. You don't have to pull out an indicator. Just read the chart. Zoom out, read the chart. The story is being told if you know how to read it. It was support, 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 lost support. What do you do when you lose support? This is a principle. There are so many things that we don't know when we trade. There are so many unknowns. But there are a few things, just a few things, that always, 100% of the time, we can bank on. What's one of those things? When you lose a strong support, or you break a strong resistance, you have to retest it as you have to retest it before moving forward. So you break a strong resistance, you retest it as support before moving forward. You lose a strong support, you retest it as a resistance before moving forward. And that's exactly what's happening. You can see that. Let's go on the daily. Let's zoom in a little bit. Here, this 630-day trend has been lost as support right there. Right in the beginning of 2023 in January, lost it as support. Right here, all this was some mini consolidation reversal channel to change the trend up. Okay? And that trend had to change because it had to retest that level, that lost level of support as resistance. And that's exactly what's happening here. So the price, or sorry, not the price, but the DXY, the US dollar currency index, going up for the past 3 weeks isn't bullish. If you read the charts, it's a bearish retest, meaning you're basically going up in a corrective pattern to retest lost support, then you will continue to dump. Okay? That's really bullish for risk on assets, really bearish for the US dollar. If you know how to read a chart, you understand that the inverse correlation between Bitcoin, the stock market, all risk on assets, and the US dollar currency index is intact. How could it not be? Okay? I would love to talk to BitBoy about this. He seems like a smart individual. But to say that the DXY or to say that Bitcoin's no longer correlated to the DXY makes absolutely no sense. Because what the hell else do you buy Bitcoin with? Potatoes? No, you buy Bitcoin with dollars. It has to be correlated. Up until which point there's another currency, there's another underlying asset that people use to buy crypto and Bitcoin en masse. It will always be correlated. It's only correlated because we use dollars to buy Bitcoin. It's so correlated that we talk about the price of Bitcoin in dollars. We don't talk about the price of Bitcoin in sats. Okay? So by definition, literal definition, Bitcoin is correlated to the US dollar. US dollar is the world reserve currency. Okay? 60+% of all transactions on Terra happen in the US dollar in some way, shape, or form. Okay? So even though you're from another country, you're still, for all intents and purposes, using the US dollar to purchase Bitcoin. This is why the fluctuations of Bitcoin are closely tied to the fluctuations of the US dollar, and why a lot of major moves in Bitcoin can be explained through a relative gain or loss of the US dollar. Okay, a lot of, sort of amateur traders, amateur speculators, analysts think that the price of Bitcoin moves because some random market maker is buying billions of dollars worth at any given moment in time. It doesn't work like that, honey. It doesn't work like that. Think about it. Think about it a little bit. This is a multi-billion-dollar market. Almost, multi-billion-dollar market. 400, 500 billion, something like that. Okay? Do you really think that there's somebody injecting 100 billion or 50 billion for, if it's a $500 billion market, to move the price 1% at any point in time, you need an aggregate $500 billion buy. Okay? Yes, there is a lot of strength in the aggregate, the mass of retail investment and corporate or institutional investment, right? But at any point in time, the price doesn't move because people are buying and selling. It moves because the relative price of the US dollar, the underlying asset, is going up and down. I've explained that a lot of times on this channel. Don't trust what I say, but verify it. Think about it for yourself. Guys, a lot of these concepts I didn't get to because I heard somewhere else. I thought about it, Why else do we go to school? Why else do we get these fancy degrees, okay, and study all these years? It's not so that we could just parrot ideas. If something doesn't make sense, you got to figure it out. Okay, well, that's a $500 billion market cap. So somebody's buying $5 billion. In this 5% pump, somebody bought $25 billion worth? Or in mass, people just bought because the CPI or PPI numbers are out? Then some random people are just buying? No, guys, think about it. Think, right? You got to think. You got to think critically, right? So anyway, we're talking about the time frame. And this is something I did not do at the beginning of my trading career. And a lot of people, a lot of novice traders only think in terms of price, okay? They only think in terms of price. There we go. But the thing is, you gotta think in terms of time as well. And that isn't some sort of pretentious thing. You have to think in terms of time because the chart, the four corners of the chart that you pretend to study and be a technician of, it all happens as a measure of price and time. There are two axes on a chart, okay? Price and time. You have to consider both. It doesn't really matter your trading style, your trading tool. There has to be some sort, a modicum of consideration of the time component. Way too many people are only considering the price component, and it actually makes you rudderless. You lose perspective. And that makes sense because you don't know when things can happen. Now, some people consider the time component by using the halving the halving schedule for Bitcoin. That's fine. That'll get you so far, okay? Up until we complete the cycle wave you can probably do okay just using the halving schedule. And you can have a macro, high time frame understanding of, what is meant to happen about a year before the halving takes place. We start to go up. That's fine and well, okay? But I'm saying on the chart specifically, on a small time frame, on a high time frame, time should be considered. This is why I'm speaking of time, because if we're alleging this move right here to be the bull market, right? I would say it starts here. Sorry, 1 second. Let me think. No. I would say it starts here. Okay, if we're alleging that this is the beginning of the bull market, right? That this started in November, okay? Then we should be able to put a time component to it, okay? Not just a price a price target as we have. And this is the beauty of Elliott wave theory, of Gann analysis, of a lot of different other tools that consider time. Okay, so when I say consider time, am I trying to say that I'm going to tell you exactly the day we're going to top? No, that's not how this works. Okay, this is a rough estimate. This is a guideline, a map, okay, just to give us some perspective so that we're not waiting for 4 years. Because a lot of crypto YouTubers, a lot of experts are saying, okay, Ethereum to 10,000 by 2030, or Bitcoin to 1 million by 2035 or something like that. Do you see what I mean? Like, you need a decent understanding of more or less when things could happen. Some others are saying in my lifetime at some point it's gonna hit 1 million. That doesn't help you to trade, okay? Even though you zoom out, don't mistake zooming out for not being precise. A lot of people conflate those two things. Like, just because you zoom out doesn't necessarily mean you're sloppy, okay? Because even if zoomed out, for you to build positions, right, in bear market accumulation, when I say build positions, I'm not talking about just spot positions. I'm talking about leverage positions, right? To build leverage positions on high leverage during these periods, you need to be accurate. You need to be precise, okay? So we're not just saying zoom out, don't worry about the smaller time frames. No, you got to be decent at both, okay? Because you're not going to get into, if you leverage trade, you're not going to get into any important positions by not being precise on the smaller time frames to make your entries. You got to snipe them, or else you're not going to make it. You see what I mean? So we're considering time, and to do that using Elliott wave theory, which is my weapon of choice, as you all know, I'm looking here at this map, okay? This map that I've drawn up to the best of my ability, all right, of the cycle waves, the primary waves, the intermediate waves, the minor waves, and now the minute waves of Bitcoin over time, okay? So I believe, and this is all based off of Elliott wave theory, that we are in minor wave 3, okay? And even if this is not minor wave 3, and I'm off a degree, what's important is that for all intents and purposes, this is a 5-wave sequence. This is an impulsive wave. That's almost incontrovertible, okay? We went up very impulsively. Proctor and Frost have something called the right look, okay, when identifying Elliott wave impulses, meaning it just looks the part. It's very difficult to deny, what an impulse is, right? It's usually pretty erect. It is usually pretty quick, price moves considerably, all that stuff. And another thing is, if you dive deeper into Elliott wave theory, you understand that if this is truly impulsive, you will have a retracement that does not go beyond the 0.618, the phi ratio, there we go, that golden mean of that preceding impulse. Not only that, typically the time it takes for those 3 waves to retrace on those 5 waves will be about equal. Okay, so that's all of the criteria that we're using to identify this right here as impulsive. Okay, and why am I talking about this previous bull run? You're saying, Dean, like, we're trying to say, I clicked on this video because you were trying to tell us, or I thought you were going to tell us how long this pump was going to last. Yeah, so why are you talking about what happened in 2020? Was it 2020? Yeah, in 2020. Well, it's because in order for us to project this wave, we need these 2 pieces of information. All right, any projection needs 2 pieces of information, meaning I need either an A wave or a B wave, or a wave 1 and a wave 2 to project wave 3. You need an A wave and a B wave to project a wave C. You need a wave 1 and a wave 2 to project a wave 3. Okay, we need a wave 3 and a 4 to project wave 5. You can also project wave 5 using wave 4, but it's less accurate. Okay, so that's why I'm talking about these. So stay with me. Don't get impatient, my friend. Now, looking at these 2, let's jump down on the daily time frame because I want to get precise, right? And we're not really, well, I'll get to that in a second. Let me stay focused. All right. You can look at this, and let's just say we're correct in saying that this is indeed an impulsive wave. All right, we have the characteristic ending diagonal. There's so many things that scream impulse, right? You have your ending diagonal here. You see that, how that ends? You don't see that in a corrective wave. Well, you do see that in a corrective wave, actually. You see that in wave C of an ending diagonal. An ending diagonal. So a running flat ending diagonal. So if you have ABC flat and wave C ends like this, you get a running flat and you see that ending diagonal. Sorry, let me draw it better. Something like that, okay? Anyway, you see ending diagonals in wave 5 and wave C, but they're quintessentially wave 5. This is clearly not a wave C, okay? In any case, this lasted 399 days. Okay, we're on the daily time frame. We're measuring it out. Now, if this indeed is impulsive, we should be able to take the Fibonacci retracement tool, measure the retracement, and see that the retracement has respected the phi ratio. So from the bottom, right, to the top, that's how we measure retracement. And we see how much it's retraced. And we can see the retracement is indeed down to between the 382 and the 618 Fibonacci retracement level, which is where we expect these wave 2 retracements to be, okay? They typically hang out between the 0.5 and the 618, actually, right? Just by, on the balance of probability, that's where you see a wave 2 retracement. So that's actually where we got to. We actually kissed the 0.5 here, okay? 0.5 Fibonacci retracement at 15.666 on this chart, okay? The other thing, so that's the price, we're considering price relationships, right? That checks out. Now, time, because time is important. Time is important. Don't get it twisted. Time is important. That was really what took me from intermediate to advanced. When I saw time and my reads got a lot more precise, a lot more accurate, because I factored time. And I was like, how did I do this without the time component? I don't know. In any case, it's because the time component is something that I didn't study until later. You don't learn that in the beginning of most Elliott wave courses, in most textbooks, manuals. They don't talk about time until like the end and say, oh, by the way, but if I were writing a manual on Elliott wave, that would be one of the first things, because it's so helpful to disambiguate wave A and a flat correction wave B, or no. Here's a disambiguation that I always use. You always see me use. How do you distinguish wave 1 and 2 from wave A and B of a zigzag, which also respects the 0618 of a wave? Time, the time component. The difference is wave 1 and 2 of a purely impulsive move, they have that time and price relationship. The wave A and B of a zigzag, which also look like 5 waves up and 3 waves down, they only have the price relationship, but they don't have the time relationship. Wave B typically takes a lot longer than wave A, okay? So the interesting thing, once again, is wave 1 and 2 typically take the same amount of time. We saw wave 1 took 399 days, and wave 2 took, I'm trying to get this down, 431 days, okay? Now, is that exact? No, but it's so close. It's 32 days off, okay? Some of you are probably thinking, Dean, wait, the bear market lasted up until here. Why didn't you drag it here? There's something called an orthodox low, okay? It's basically, you have to distinguish different movements. So an orthodox low is and an orthodox high is basically the beginning and the end of a move. So when you count 5 waves, you can count the orthodox low, the beginning of the wave and the end of the wave. You don't start counting the subsequent sort of corrective waves, okay? So like this went higher than here, right? We stopped at 61 or 60K, and then we came all the way up to 69K or something like that, right? I'm not counting this as the high of the bull market because this was bullish. This was the impulse. The correction started here after 399 days up, okay? So that's why I'm measuring here, because this is a different phase. This is an impulsive phase. This is a corrective phase. This is a type of corrective phase, but a sideways accumulation phase, okay? So that's a completely different phase of price action. And, you know, this is basically absorption of supply of this, you know, double zigzag impulse down. Okay, so 399 days, 431 days. These are very, 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 very likely. High degree of probability. There's no 100% in this game. You know, at least there are very few cases where you can say 100% for anything. But this is as close as it gets to. This is a wave 1. It's a wave 2. Is it a minor wave 1, minor wave 2 in terms of Bitcoin's entire price history? I believe so. But whether it's a minor or minute, it doesn't matter. The fact of the matter is, if this is wave 1 and wave 2, wave 3 is coming. And this takes us now to our projection. This is how we can project price and time. Okay? Price and time. This is why when I project Bitcoin to $1 million plus, actually, you'll see in a second, but over $1 million, people think I'm crazy. I'm not doing it emotionally. I'm not doing it because I heard it. I'm doing it based off of this very simple analysis that I used every day. I'm not trading right now for obvious reasons, right? Because I've built my positions, and I basically, let's say this were the 5-minute chart, okay? And this was an intraday trading session, right? You saw a wave 1 and a wave 2. This is your setup. You wait for a bit of consolidation. You get a breakout. Like, you don't do anything. You waited for this. You waited here. You got in the trade. You just wait for it to play out. That's why I'm not trading. Okay? This is why I am not trading at all. Even when we get into 6 figures and we put in that wave 2 correction maybe to, you know, a 60% drop, I'm not touching any of my positions, right? Because I'm just looking at this like I want this move, and I want the meat of that move, and that is my trading plan. So anyway, so now that we've established the high degree of probability that this indeed is a wave 1 and this is indeed a wave 2, right? And this is indeed an accumulation zone, right? Now we're going to project wave 3. This is the fun part. Okay. Now let's zoom back out on the weekly. Okay. If you're not with me or you're confused, let me know. This is the time and the place. This is why you join the live stream. If you're serious about learning this stuff, you join me for this kind of stuff, but also you're studying it on your own, because you got to do your own research. I can't replace your efforts in buying a book or borrowing a book and reading about it and studying it on your own. In any case, so projecting wave 3 we can do in 2 ways. First, we do wave 3 projections with price. Okay, that's what people typically do, right? You go from the bottom, sorry, I'm getting ahead of myself. Okay, you take your Fibonacci extension tool, not the retracement, but the extension tool. It's a different tool. Okay, you go from the orthodox low of wave 1 to the orthodox high of wave 1. The retracement, I'm waiting for it to catch. Oh crap, these stupid magnets sometimes are tough. Okay, orthodox low of wave 1, orthodox high of wave 1, retracement of wave 2, and wave 3, as everybody who studies Elliott wave should know. If you don't, wave 3 typically extends to between the 1618 and the 2 Fibonacci extension. What is the 1618? It is the phi ratio. The 618 is the phi ratio, and the 1618 is the phi ratio. Okay, it's just the inverse. The 618 is the inverse of the 1618, and vice versa. So the phi ratio is in not only this place but also this place. And wave 3 typically extends to between the 1618 and the 2 Fibonacci extension. Okay, so this is where we can expect wave 3, a typical wave 3, to land. And what is that in terms of price for Bitcoin? Well, wave 3 is at 1,654,892 between that, which is the 1618, and $4,853,830. Okay, so I say just round about between 2 and 4 million is my target. Between 2 and 4 million, between that 1618 and 2 Fibonacci extension. That is the price target for wave 3, minor wave 3. Okay, so the previous bull market was minor wave 1. This was minor wave 2. Now I'm looking to trade minor wave 3. That was basically, I've had this on the channel and I've presented this for months. Okay, I had this plan months ago. Chestnut checkers, my friends. This is the power of a trading map, a really good high time frame trading map. Everybody's trading up and down the 5-minute chart, making a little bit of money here, a little bit of money there. You're looking for the trade to end all trades. If this goes, I'll probably still be trading, but I guarantee you I won't have to. And it's not one trade. If you're subscribed to the channel, you'll understand that the active trades, my active trades watch list is essentially every single trade that I am in. Okay, some of these I have multiples of on different exchanges, but essentially I have about a couple dozen active trades accumulated during this bear market, right, for this wave 3, because that's what my plan is what my plan dictated, right? The plan sometimes has to be bigger or concomitant or appropriate with the move. Okay, the move is a minor wave 3, as I call it, or this, whatever you want to call it. It's a wave 3 of this magnitude on the weekly time frame, right? If you're trading and you're not seeing that magnitude of a move, you're leaving money on the table, because you can trade in and out, 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 in and out. You'll never, ever, no matter how systematic you are, no matter how little you sleep, you will never time these impulses in such a way that you get in and out and in and out and in and out without leaving so much profit on the table. Do you see what I mean? Like the money you save by getting out of the way of retracements, you will have lost by missing moves to the upside. I, once again, am speaking from experience. I remember my friend, I have another friend from high school, Evan. Evan, if you're listening, what's up? He came over and he actually bought Bitcoin in the past. And I was saying, Evan, I'm getting into trading and I have this genius idea. I told him this, I promise. I love how innocent and stupid I am sometimes. I said, Evan, I got a plan. Here's what I'm going to do. I'm going to learn to read charts and I'm going to buy while it's going up and I'm going to sell before it goes down. And I'm going to do it again and again and again and again. And I promise, Evan was like, bro, like, I don't know about that. Like, I'm like, Evan, it's going to work. And I'm so argumentative. I spent hours convincing him this was going to work. Okay. And you know what? Fast forward till today. That was years back. This is what I'm doing, but I'm just doing it smarter. I'm doing it in a way that I can, you know, I'm not losing sleep over it. I'm not doing it on the 1 hour chart or on the 15-minute chart, right? I'm actually doing the same thing, but I'm doing it a little zoomed out. You see what I mean? So yeah. Why did I say that? Why did I say that? I don't remember why I said that. That made me laugh. So yeah, oh yes. I did try to do that and I lost. And one of the things I realized, and I wrote this in my trading journal as well, is I fucking missed the move, even though I'm literally 18 hours a day trading, watching my Coinbase account at the time. I was trading on Coinbase. And I'm watching all these momentum indicators that I was following because I didn't really know any better. And I'm like, the momentum is going with this, and then that was jumping, and I would take money out of this trade, and I would go and put it on that trade. Then I would take money out of that trade when I thought it was going down, and put money in the other trade. And I ended up missing moves left and right. And my P&L either stayed the same, or I will lose a little bit in fees, all because I never rode the trend. I wasn't patient to just let it go. You know what I mean? And these are the days people will realize if they haven't. So a bull market, you can define a bull market in so many different ways. Yep. Some people like to define it as a year before the halving. Some people like to define it as a higher high on a high time frame chart. Some people like to define it, like myself, as the correction and subsequent accumulation is over and a new trend, a new impulse has begun. But another way to define the bull market in terms of sentiment is you go to bed, you wake up, not only has the price gone up, like for some assets, not all of the assets, but a lot of assets went up 10%, 15%, and you don't even look twice. The daily candle closes, maybe an hour after, things are up 10, 15% again. You don't think twice. And then some random thing in your portfolio goes up 40%, 30%. You don't think twice. And then another thing goes up 10%. Everything's up 5 to 10%, and it's normal. And then the daily candle closes, the same shit happens. Oh, and then overnight, something goes up 50%. Okay, that is sentimentally what it feels like to be in a bull market. It's like, it seems like it doesn't stop. The trending of positive price action just seems incessant. And that is it. Doesn't necessarily mean that these things don't retrace. They do on a small time frame. But it's a fool's game to worry and to expend time and capital to try to pinpoint accurately trade these counters against the wave of the trend. It's a losing effort, okay? And one of the things, when I did it, I thought I was so big-brained. And I felt so good about myself because I'm like, You know that meme when the guy with the party hat, he's standing in the corner of the party and everybody else is dancing and he's holding his drink and he's alone, and then there's a caption, and that's the meme. Like, they say, they don't know, I counter traded and I didn't pay any of the maker or taker fees or whatever. You know what I mean? Because if you're counter trading, you're generally being paid to take that trade, right? So when everybody's long, you have to pay to go long, and then shorts are getting paid, right? Everybody's short, you have to pay to go short, and longs are paying, or shorts are paying longs. Do you see what I mean? So I thought I was so big brain. I'm like, I'm taking these trades, and the shorts are paying me, or the longs are paying me, right? Because I was against the uptrend or something. I forget, but I was counter trading. But who cares about $10 to $15 or whatever the hell the trading fees were, versus the potential gain, or the potential that what am I trying to say? The lost potential, or the potential amount that you're losing because you're not in the right trade and you missed it by a few moments because you're up against a trend that can go off at any point. You know what I mean? And of course, I was just in one trade, but now with this type of watch list, imagine actively trading this entire watch list with one person. You know what I mean? It's not feasible. That's another thing. If I were in one or two assets, maybe. Okay, and at the time I was doing just one or two things, and maybe I would add a few. One or two things at a time. But anyway, so let's get back to our projection. So we projected the price, and you can see it should come between the 1618 and the 2 Fibonacci extension. Keep that in mind. The other way to project using Elliott wave theory is to channel, okay? So we like to channel waves, okay? And what you typically do is you channel. Actually, I should take this channel. Let's try this. You channel waves based off of different points to the downside. Okay, so let's see. Okay, here we go. This is one way to do it. Okay, if I take wave 1, wave 2, wave 3, I could make an argument that wave 3 should end up here or throw over just a bit. Okay, and a throw over in Elliott wave theory is when you channel these trends and you come over a little bit. A throw under is when you come under a little bit. Okay, so that was a throw under, and this would be a throw over. Okay, so let's put so if I take this channel and I use data from wave 1 and then my purported wave 1 and wave 2, and I say wave 3 could be around here, but it could be just a throw over of this trend, right? Because this is the trend top right here according to this. But again, it's not so. Hold up, let's see. Does this catch? Okay, this makes it stronger. Remember what we say about trends. Trends, it's all good and well to draw random lines on a chart. One, your chart has to be well drawn out. Okay, well set up. You can't look at a high time frame chart without the log scale on. You have to turn the log scale on. The second thing is you have to make sure you have an adequate amount of data. Okay, to build this channel here, I have multiple points of data, right? I have 1, 2, 3 points for the support, okay? So for the bottom of the channel, and I have 1, 2 points for the top of the channel. Okay, so that gives me confidence to say, okay, this is a viable trend. And mind you, this is on the weekly time frame. So even though 2 points don't seem like tons of data, on the weekly time frame, it's significant, okay? Because you're talking about, for instance, the bottom now having had 3 points. That is a trend that is 2,520 days strong, okay, on the weekly chart, okay? And the top is a trend that is 1,512 days. So whatever you want to say, whatever happens, do expect when Bitcoin hits about, whenever this hits the top of this channel, be it at $600,000 or $700,000, you're going to see some sort of retracement. I would not be surprised if that retracement were a sort of wave 4 and then a wave 5 gave you your throw over, okay? The other thing I want to say is this. I really like, we're projecting. Let me stay on task. So we're projecting wave 3, and so if we take our channel, another way to project is using the channel, and you can see that wave 3 would still be, let's see, let's do wave 1, top of wave 1, retracement of wave 2. Okay, so yeah, wave 3 is still in that position. Let's say it conservatively, wave 3 only hit that 1618 at 1.64 million. You're essentially getting a mini throw over, okay? A mini throw over right there. I think, to be conservative, that's a little more likely because a throw over of that magnitude is quite a lot. So I'm going to say, for our projection, I'm more comfortable projecting, and again, this is just a roadmap, this is just a guideline, this is just something to wrap my mind around where I can expect the end of the trend, when I can expect the end of the trend. That's what we're going to get into in a second. That's the topic of the live stream. But around 1.64 million, and that 1.64 million represents, once again, that phi ratio, that golden mean, that 1618 Fibonacci extension of the wave 1 and retracement of wave 2. If you just jumped into the live stream or you're not familiar, just rewind. I talk about why I take wave 1, retracement of wave 2 to project wave 3. That's not something I made up. It's not anything special. It's a run-of-the-mill, fast or tried and true extension projection strategy, or not strategy. It's a projection method. It's how we project wave 3 in Elliott wave theory. Okay, you can do it on any time frame, and it's quite accurate. Okay, obviously you can always get truncated wave 3s, which come to a minimum of the 1 Fibonacci extension, or an extended wave 3, which blow past that 2 Fibonacci extension. But more often than not, that 1618 to 2 Fibonacci extension is your target. Okay. The other thing I really like about this is the fact that our 10-year trend is now that we draw our channel in this way. And actually, let me fix this because I don't like when I like to draw my channels without the lines. There we go. Okay. So our channel actually has a resistance right where we should expect resistance in the price. Okay? This dotted line, if you follow my work, you understand that this is a 10-year trend. Okay? And this trend is super important, and price will absolutely reject off of that. When I say reject, it's not going to reject and come to zero. No, it's going to reject. We're going to get a major retracement once price hits that trend line, okay? We're used to horizontal trend lines, diagonal trend lines, straight line trend lines, okay? Now, sometimes a more advanced read on the markets gives you a parabolic trend line, okay? Although we don't see it every day, this is also this is something that you typically get in trending parabolic markets, okay? Bitcoin is a trending parabolic market. we have to look at it on the logarithmic scale, okay? Because if we looked at it on a linear scale, it wouldn't make sense. The arithmetic scale cannot contain the price action over the years, right? So we have to go and put on the logarithmic scale. And as a result of that, as a function of that, I'm not a mathematician, but I understand the basic concept. As a function of that, a lot of times when we want to represent high time frame price action, we actually have to look at these parabolas, not straight diagonal lines. Do you understand? If Bitcoin's growth was linear, we would be able to draw a nice diagonal that would represent a diagonal resistance or something. You know, you can't do that with Bitcoin. You can't do that with most cryptocurrencies. This is why, if you're watching an analyst and they're doing a high time frame analysis in crypto, I mean weekly, even daily sometimes, if they zoom out enough, and they're not on the logarithmic chart, okay. I'm not going to name any names, but there's a lot of huge accounts that do this. Well-respected analysts, then, ask for your money back, run, you should figure it out. If you haven't figured that out by now, it's your fault. Guys, one of the things that we love about crypto is the self-sovereignty. It's the democracy about it, right? It's democratizing high-level finance, derivatives, exchanging commodities, right? Basically self-custody, all that stuff. But all that stuff comes with responsibility. And one of those responsibilities is to educate yourselves. Educate yourselves on how to be chart literate, how to, keep and hold your crypto should you choose to, and how to, practice good risk management if you're trading. So all of this is incumbent on you to learn. If you don't understand that you need to read a high time frame chart on the logarithmic scale, again, it's your fault. It's not Garrett Soloway's fault. Yeah, I said it. It's not his fault. Even though he doesn't know how to set up his charts. Okay? It's your fault. Okay? And if he doesn't know that, then that's his problem. But now you made it your problem because you didn't take the time to do your own research. That's the whole point of doing your own research. Okay? Learn to set up your charts. Alright? So, having set up your chart, you can see that Bitcoin, for its entire lifespan, respects this parabola for 13 years, or no, 10, 11, 12 years, 12 years, I don't know, 12 years, something like that. It's important, okay? So for 12 years, every single time we hit it, it was resistance. Now, you'll see that this also not only represents our next major resistance, but also it's the midline of our channel. And what do we know about midlines of channels? Okay, if you follow my work, you understand I say this all the time. When you're channel trading, the top of the channel is resistance, the bottom of the channel is support. The midline is resistance if you're below it, support if you're above it. Okay, so we have a massive double resistance when Bitcoin hits, whenever Bitcoin hits 6 figures, probably I want to estimate 130 plus K. Expect a major rejection, and I'm not talking about just a consolidation, a major rejection. That rejection probably takes the form of a wave 1. Okay, that's what I'm seeing. A wave 1. A wave 2. Did I say wave 1? A wave 2. But I don't know. Okay, that's the other thing I want to talk about. I don't know what... Let's turn them on because I hit them. I drew some minute waves. For those of you who are not versed in Elliott wave theory, minute is... Sorry, 1 second. I can't do 2 things at once. Let me do one thing at a time. Okay, here we go. Now I can talk. Minute is a degree. If you... study Elliott waves, you know that we talk about 5 waves up, 3 waves down. Impulses happen in 5. But, further study will reveal that it's not only important to say this is wave 1, wave 2, wave 3, wave 4, wave 5. That's what most of these analysts on Twitter talk about. It's important to distinguish what degree you're talking about, okay? Because that tells you everything. So when we're talking about degrees of Elliott wave, you can see just in your trading view, you have like these big degrees. Like for instance, the biggest degree I count is the cycle wave, okay, for crypto. And then I go down to primary, intermediate, minor, minute, minuet. It actually doesn't matter what you call them. Obviously, you want to call them something that we all call them so we can exchange notes and, we know what we're talking about when we're discussing our analysis. But it's just so you can organize the Russian dolls of impulses. Do you understand? If everything's wave 1, wave 2, wave 3, wave 4, wave 5, what wave 3 are you talking about? I'm talking about the wave 1 of that wave 1 of that wave 1 of that wave 1. No. You say, that's why I say this is the minute wave 1. This is why I call this the minor wave 3. Because that basically says I have a primary count, and I have an intermediate count, and I have a cycle wave count, and so on and so forth. So anyway, the minute count is not something I know how it goes. And I'm happy to say I don't know how it's going to go, and I don't care how it's going to go. It doesn't at all change my plans, okay? A less adept version of Dean would have tried to be big-brained, 200 IQ, and trade and sell at these major corrections because I want to maximize my gains, okay? But an even bigger-brained version of Dean doesn't mind these intrawave corrections. As long as I get in down here and I get out somewhere up here, that's mission accomplished. I'm not going to risk my hard-earned positions, okay? I'm talking not spot, okay? Spot is one thing. I'm talking my leverage buys. I've got epic positions that I'm going to let ride for however long this takes. We're going to talk about that in a second. Excuse me. I'm going to let that ride for the duration of this impulse. Because I understand, obviously, when you're leverage trading, if you add to your position, you're moving your liquidation and your stops, or you're moving your liquidation point up, okay? When you sell out of your position, you build a new position, now your stops are back in the line of fire. Do you understand? You increase your amount of risk. It's not worth it for me. It's not worth it for me to increase my amount of risk to save on this retracement. I'd rather just live that out and then wait for it to continue to go up. Do you understand? Again, the map is everything. The high time frame map is everything. That informs what I do on the minute chart, the 5-minute chart, the 15-minute chart, if I even go there. But first, I need to know with a high degree of probability, high degree of confidence, what is going on and what is likely to happen. Now, you are here because I was talking about how long this pump can last. And this is what the pump looks like, more or less. And again, I don't really care if... I think there's a high degree of probability that wave 1 ends here at this double resistance, right? This 12-year resistance of this parabola and the midline of our trading channel. It's highly probable that that represents the end of wave 1. And if you really study the psychology behind the various Elliott waves, right? There are 5 of them in terms of the Elliott wave impulses, yeah? Wave 1 is the disbelief rally. It's always the disbelief rally. In Elliott wave theory, wave 1 always represents that wave that nobody saw coming. Because in order to see wave 1, you need to be able to read with some level of fluency these corrective accumulations, and that's expert level stuff. Only the pros and the really seasoned traders can read the cause and project the effect. The cause, which is the accumulations, the corrections. Once we get into the actual impulse and we start moving in the direction of the trend, your average person understands that the price is moving in the direction that they think it's moving, right? They only get it once it's happening. And that's not a bad thing because, again, in terms of risk management, there's a lot of Elliott wave traders that actually don't trade by accumulating here. They wait for that wave 1, wait for the wave 2, then they get in the trade. They only trade from wave 3 onwards, okay? And that's a really prudent way to trade. I personally don't have the patience to do that. Given everything that I've invested in my education and the ability to read AV bases, I don't have the patience to wait for wave 1 and wait for wave 2, and I don't think that's the worst thing. Yes, I took some losses trying to accumulate positions in this area because it's a minefield, but I'm fine with those losses, and actually I probably took fewer losses than I would having relinquished this entire first move. Okay, so I don't know a lot about how this uptrend is going to look like in terms of where every single last wave is going to end up. If that is wave 1, let's just do this really quickly, just because. I mean, there's so many things it could do. It could be that wave 1, it's actually very likely that wave 1 started all the way back here. So you could say, is wave 1 an extended wave? And then wave 3 end up being, wave 3 can never be the shortest wave. So wave 3 has to be just the same size, at the very least, the same size as wave 1. I don't know what it's going to look like, but I don't care. That's not important. What's important is that I'm in the trend, okay? So I'm just going to leave this. But now that we have the projection, right? Let's get rid of the minute wave count. I just wanted to illustrate that. Now let's project time, because we don't only project price. So you saw with the price projection, I use the extension tool, right? The price extension, or the Fibonacci extension tool. I think that's the what's it actually called? Trend-based fib extension. Okay, that's what it's called. For time, I'm using this tool called the trend-based fib time. Okay, I've also played with the fib time zone. I've played with I think there's another one, right? Oh, I think it's just those two, fib time zone and trend-based fib time. There is no projecting time is not as common as projecting price. So in studying projecting time, there's not so much I could go off of. There are a few people that do it, and I studied them, but a lot of that I just tried my best, back tested a bunch, and I've seen that this is the best tool for that. The trend-based fib time. So the trend-based fib time, much like the trend-based fib price or the trend-based Fibonacci extension, you use the previous trend. So I'm going to use wave 1 from the beginning of wave 1 to the end of wave 1. And now the retracement of wave 2. So basically the time, all I'm doing, understand what you're doing here. You're taking the time it took for wave 1 to form, 399 days. The time it took for wave 2 to form, 421 days or something like that. And that gives you then a projection of what wave 3 should do. Okay? So that's essentially what you're doing with this really simple tool. It's not overly complex. Okay? And just like you use the golden mean and the phi ratio, the 1.618 phi ratio, to project the price, you can do something similar with time. Now, before we get into it, I want to say that understand this. Practically speaking, when you're looking at Elliott waves, impulsive Elliott waves, typically your wave 1 goes like this, wave 2 comes down, right, between 0.382 and 618. Takes about the same time that wave 1 took. Wave 3 typically goes like this. It's pitched a little more. Do you see? So I'm getting into a little Gann analysis. I'm looking at the angles, the pitch. If wave 1 is pitched like this, wave 3 is typically pitched a little more. Do you understand what I'm saying when I say pitched? I mean the angle, right? If the angle, let's measure the angles. The angle, right? The angle is a little more acute. It's a little more acute of an angle right here for wave 3. Look and back test this. Don't take my word for it. Look and back test all wave 3s. This enables wave 3 to be more impulsive, which it typically is, way more impulsive and bigger, and actually reach targets faster than wave 1. So in an Elliott wave impulse, what you typically see, your wave 1, your wave 2, all right, took about the same amount of time. Wave 3 took less time and went 161 to 200% further than wave 1. So just keep that in mind. I'm not making that up. If you study the wave principle, you understand exactly what I'm talking about. Wave 4 then takes forever usually. Comes between the 382 and the 236 and the 382 of wave 3, and then wave 5 does its thing. Okay, but you typically get a really steep wave 3, a quick wave 3. Even in Bitcoin's price history, you'll see the same thing. Do we have a wave 3 here? On this time frame, we don't. Okay, this is the smallest of the degrees that we have, the minor degree that we're in right now, so we don't have an example. But obviously if you go into smaller time frames, this is time frame agnostic. It's completely fractal. You go in any chart on a smaller time frame. We can do that in a moment if you guys want, after we finish this this time projection. But you'll see exactly what I'm talking about. Wave 3 is faster and takes less time. So if wave 1 took 399 days, don't expect wave 3 to also take 399 days. It could take a lot less time. This is one of the reasons why a lot of people are going to be thrown off by how fast this wave is. Okay? They're not going to know why the price is going up so fast and so far. A lot of YouTubers are under the impression that the high for this calendar year of 2023 for Bitcoin is in the $30,000 to $40,000. Do you understand how the map is everything? Because if you're under that assumption, you're not going to trade. You're not going to accumulate everything here. You're just going to wait. You're going to think you have more time. If you think that 40K is the top or 50K is the top, and we're not going to make an all-time high this year or something like that, right? And we're going to go back down and make a lower low or something like that. You trade accordingly. You prepare accordingly. Do you understand? The high time frame preparation is everything. A lot of people are going to be caught unawares. So, I know I'm dragging this out, but here we go. We use our trend-based fib extension, and I welcome you to do this on your own as well. It's not too difficult, and this is analysis. Doesn't necessarily mean it's 100%, but it is a guideline. It's a really steady guideline that you can use on the smaller time frame to prove to yourself that there's something to this. There is some validity to these projections. If you don't do that, then how do you know? Maybe I'm just making it up. And if I am, then you're not going to use it, because you're just going to say, oh, nice sounding idea, interesting, or as the kids say, cool story, bro. But until you make it your own, it's not true for you. That's why you have to do your own research. Okay. So the trend-based fib extension tool gives you all of these data points. Now, these different tranches, these segments of colors represent different time frames. So you have the 0, the 618, the 1, the 1618, and the 2. I set those up like that. Why did I set those up with 2, 618, 3, 7? Basically, I'm using Fibonacci numbers, right? Whatever trading style even people who, know nothing about Elliott wave, everybody use fibs. A lot of people use fibs. Not everybody, but a lot of people use fibs. And everybody knows how amazing the golden mean is. So for this trend-based fib extension, I am also using the golden mean. And I'm thinking about it. I'm not just taking it blindly. I'm thinking, okay, 400 days up, 400 days down. That means wave 3 should take a little less than 400 days and go approximately 160 to 200% the size of wave 1. Okay, so I'm looking, and I've set my tool up. Okay, all of these indicators, all of these tools, if you don't understand them, you're not using them, they're using you. You have to know how to set them up because you have to understand them. Okay, so the way I set it up was simply by, like I said, using a bunch of Fibonacci numbers and targets. And my main one is the 618 and the 1618. Now, the 1618 I discard for this particular projection, for this particular exercise, because it's all the way in April of 2024, and that just doesn't make any sense, right? That's 634 days from now. I trade all the time. I trade on the 1 minute chart. I trade on the daily chart, the weekly chart. I've never seen a wave 3 take, let's see, that would be, well, that would be just as long, right? That would be just as long, but it doesn't make any sense, really. And I'll tell you why. Anyway, let's just, I can explain this further, but let me not throw the conversation off. For the purposes of this projection, I'm going to assume that 1618 Fibonacci time extension is it's unlikely. It's improbable. It's highly improbable. So I'm going to focus in on the 618, the golden mean. It's the magic number. It is the phi ratio, the golden mean, okay? And so that's where I projected my time projection to, okay? And actually, when I did this many months ago, maybe a year ago, I said, and I have it written on my whiteboard here, the projected Bitcoin top is February 19, 2023. And that projected top was based off of this time analysis of wave 1, retracement of wave 2, and then projecting the golden mean for wave 3. However, I didn't know that we're going to take almost 300 days to go sideways in accumulation of the bear market drawdown. So, now having said that, I feel like I'm still projecting to the 618, but plus or minus a month or two, okay? And so, look, if we have our wave 3 end up over here, that would be in April. So this is what I'm saying, like, anytime between March and May, I expect the Bitcoin top to be anytime between March and May from this 618, which we're on right now. Pretty much, we're 3 days away from that February 19th projection date. So I give it about 2 months in, obviously, in forward time, right? In the positive direction. So I would not be surprised if between March and May, we got to this target, okay? That would be 60 days of explosive upwards price action, all right? Now, what else gives me a lot of confidence in this projection? It's that if you get up here at this time, you gotta come now back down for a wave 4 correction, right? If this is wave 1, wave 2, wave 3, wave 4, wave 5, okay? Wave 4 coincides quite nicely with what? April of 2024, which is, I had to look this up. Now, this is an estimate for Bitcoin halving, right? But the projected Bitcoin halving, when, oh shit. Sorry. They say March of 2024, okay? So I have it on this chart as April, but let's say it's March, okay? So basically that typically, and this is what confused a lot of people. Let's say it's March, okay? It's essentially in the same area. You typically get a halving around the same time as the price bottoms. You typically get a halving. My 4-year cycle people know this. You typically get the halving around the same time the price bottoms. This is why so many people, BitBoy included, who are proponents of the 4-year cycle, not to say I'm not, but this is why I said in the beginning of the video, this is a crude way of timing the market, because you still don't have that accurate of a map. I agree that the next halving, March or April of 2024, will represent the end of a bear market, or the bottom of a bear market, okay? But he's assuming that we go up and we come all the way back down. Maybe we don't make a lower low, and then that basically shows us that, okay, it would be something like this, right? He's assuming we do a lot of this. And so everybody at BitBoy, TJ, and everybody, they're thinking that we don't go too high, because they're thinking in terms of what the halving is meant to represent, you know, with respect to the price. But what they don't see is, if this wave 3 happens as impulsively and as quickly as the charts say it should, as the wave theory or the wave analysis says it is, we will have a whole entire new bear market in time that should last about a year, or a little less than a year, in time for the next bottoming, which should be around the time of the halving. The other great thing about this is what? I've said this so many times on this channel. So many things in trading that you don't know and you can't say for sure. Very few things, if any, that you can say 100%. One of those things is the principle that when you break important resistance, you have to retest it as support. This is 12 years of price action. 12 years of Bitcoin. Once again, shout out to Crypto Mo. He doesn't post that much these days. You know, when you really make it, you can tell who's really made it. Sometimes it's, you know, because life takes over, other things are, you know, taking precedence, you start a family, whatever. But Crypto Mo is a really good trader. And he's made a lot of money. You know, he doesn't post on YouTube much anymore. But it's from him that I really paid attention to this parabola that every single time for the past 12 years, Bitcoin's hit and rejected off of. I think this is the one time, this is finally the time we break it, okay? And we break it to the upside with this strong move, with this wave 3. And when we retest it, this will be not only the halving, but also a retest of our 12-year resistance. We have to retest it, right? Just like we did right here. Sorry. You probably can't see it on this time frame. Let me go on the weekly. But same thing happens all the time. Look. Guys, if you're getting value, please like, share, and subscribe. Here we go. Do you see this? Break of resistance, retest. That was resistance, a serious resistance that we broke, okay? It represented a resistance of, you know, from 2018 to 2020, a 2-year resistance, 2+ year resistance. Broke it to the upside, retested to the downside. and now you move on. You're gonna have to do it again. It's just bull markets, bear markets, any impulse. It's a series of broken resistances or broken supports and retests of those same levels. So here we go. You break, you retest, right? And you probably retest in a complex way because it's a wave 4. You're likely to get a complex correction, a sharp complex correction. So something like this. So that bear market's going to be heinous. It's not only going to retest the 12-year resistance as support, but it's also going to retest this midline, which is strong resistance, right? Look, this is a really, really nice, consistent plan. Look at this channel. You're at the bottom of the channel here. Bottom of the channel. You're basically trading the bottom of the channel towards the top. Okay? That's another reason. You know nothing about Elliott Wave. Nothing. But you're a channel trader. You zoom out. You see that there is a contiguous channel from 2013 to present day, where the price has gone up and down, up and down, up and down from this channel. Okay? And actually here, you didn't go all the way up. You hit the midline, okay, and went down. So now you go up and you hit the top of the channel. That's where you get your $1 million Bitcoin. This is why people say, oh man, $1 million Bitcoin in 30 years. Like, what are you talking about? Or 20, 30, what's that? 7 years, like, you know. This is why chart literacy is important. If you're gonna be in this space and you're gonna be trading, okay, and you don't know how to read a chart, you don't know what you're doing, and you're going at it blind, okay? You're going at it completely blind. So 1 second, let me just check something. Okay. All right. So this is another reason why no knowledge of Elliott Wave theory, just having basic understanding of trading channels. You know, you're at the bottom of a channel. You basically went from the bottom to the midline, which is resistance when you're below it, rejected off of it. Now you're going to probably hit that top. It's unlikely that you're going to find resistance here in such a way that you did here, right? You're probably going to, boom, attack the top of the channel. Once you attack the top of the channel, you're going to have to retest it as support before moving on, okay? You're going to have to retest this channel as support before moving on. And at that point, you can finally move on with your life and you get out of this channel and you move from one trading level to another. I hope that makes sense. So even if you're not a proponent of Elliott Wave theory, it doesn't make sense to you, you think it's bullshit, look at it in terms of a channel, a big trading channel. And the thing I love about Elliott Wave theory is that it doesn't necessarily, it's not like some random idea. When I post my wave ideas, my wave theories, my trading theses, it's corroborated by basic, simple, straightforward analysis. And if you know how I do on this channel, how I work on this channel, I love straightforward, simple analysis. Memento Mori says, thanks for your help, boss. You're teaching me to watch for price action instead of momentum and short-term indicators. The long-term indicators are helping me see better. Keep up the good work. Yeah, definitely. My pleasure. I learned it the hard way, and I guess everybody has to learn things the hard way at some point in time. But already, I've made more money than I've ever made in crypto, and we haven't even taken off yet. Already. Just by accumulating, and we haven't even taken off yet. We're still at the beginning, And the money that I've lost in trying to accumulate those positions is insignificant. I'm still in the red, but I will quickly be, if things continue in the same way, I will quickly be, more than profitable for this go around, for my efforts made in trying to accumulate over here. So anyway, so here we go. This is the move. This is very likely the move. And for people who may think that, the idea of doing this in 2 months is inconceivable, well, look look at this pattern. There's a pattern here. There's a pattern. All of this is math, okay? It's angles. There's regularity. Just like in nature. You look outside, every 3 months, more or less, there's a new season, right? Every 24 hours, there's a new day. The sun comes up and goes down based off of a certain power. There's a rhythm to nature. Trading markets that are openly traded, right? In a free and open market, they also respect natural rhythms because they're an extension of our behaviors, right? Of our buying and selling, our greed and fear behaviors. Look at the rhythm that this high time frame price action for Bitcoin has put in this channel. Up, down. Look at the angles. I want to really, let's actually put this in. I've never done this before, but I think in terms of just getting a decent idea for when the $1 million+ Bitcoin, because people think that's a unicorn. People think that is inconceivable. It's never happening. It's going to happen a lot faster than people think. The 6-figure Bitcoin, the $1 million Bitcoin are going to happen much faster than people think. Okay? But a lot of people are not even going to be prepared for it. They're not. Okay, here we go. Look at this rhythm. Look at this rhythm. Our projection isn't crazy. Our projection isn't crazy. Here, we can actually just stop there. Actually, let's stop here. Fuck. Sorry. Let me do that again. There's something specific I want to do with this. Because I really want to highlight the rhythm, the periodicity, yeah? The periodicity of these moves. These trends are really... And again, right now we're focusing on the high time frames because it is appropriate to focus on the high time frames. There's a time and a place to focus on small time frames. And like I said, if you're getting into trading leverage and you want to build positions, you have to go into the small time frames. We're not only focused on the high time frames because, you know, we're against small time frames or there's no use in going small time. It's just like when you're on the brink of a high time frame move, you want to zoom out. That's pretty much what I'm saying. It's not the time to be but hunkered down on the small time frames. And here, this is the... Okay, so just looking at that, does that look, if I gave you a pattern, okay, if you were like a first grader or second grader, and I gave you a pattern, and you don't know anything about this, you don't know that this is the chart pattern for an asset being traded on an open market, and I said, it goes like this, like that, like this, like that, like this, like that, and then I put a question mark. What comes here? Are you going to say up or down? Obviously, you're going to say up because you go up, down, up, down, up, down. You're going to say up, right? And then I ask you, what does this line look like? Let's say let's do it again just for to really hammer this home, okay? If I hope you guys understand what I'm trying to say, okay? Because we went through the analysis technically using, all of the Elliott wave theory and all that stuff, but you could just do this really crudely. Yeah, it's crude, but you could do this crudely in this way. If I said, here's a pattern, what comes next? You would say up, and I asked you, now draw me what that looks like. Would you draw this? Would you draw that? No, you wouldn't. Why wouldn't you draw that? Because you would say, well, that doesn't really fit the pattern. Actually, here. There we go. You would say that doesn't really fit the pattern. You would say that doesn't really fit the pattern because it's off a bit. Right? If you look at what happened here, what happened here, especially this right here, this one and this one, you would say, okay, I know what comes next. It's gonna be, you would basically do this. If you're really clever, okay, and I asked you to complete the pattern, you would say, I'm going to take the pitch or the angle of this, which is the same, more or less, as this, and I'm going to say something like this. You would say that fits, wouldn't you? Right? That fits. There's something about that pattern that's pleasing to the eye. Maybe it's the angle here. Maybe it's the angle here. It's been a while since I've done geometry, so I forget what the name of these angles are. But essentially, you would not be surprised if we went up in such a way, right? So the idea, I basically mean that to say this. The idea of us going to 1.64, 1.68, whatever the hell it was, $1 million per Bitcoin in 2 months isn't as crazy as it seems when you really sit down, zoom out, look at the price action, look at the pattern that the price has been in. So that is my case for how long this pump should last. I say 2.5 months at most, after which I'm looking to divest myself of all of my positions and I'm preparing for the next bear market, which should take us down to this level about 250k, maybe down here 171k, right? For the halving. 200 to, anywhere in this region. Basically, we stay into 6 figures for the halving. Okay? So that's what I'm seeing, and that's why I'm seeing it. All right. Okay, let's have a quick look at the DXY. Okay, so the DXY is doing like what we thought it would be doing, right? Let's turn on our momentum indicator. Yeah, so it's like completely oversold or overbought on the daily time frame. Completely overbought on the 4-hourly time frame. It's probably got a little leg up on the smaller hourly time frame, but you can see the 4-hourly time frame and the daily time frame, and maybe the weekly time frame. Let's see, weekly. Okay, it's getting up there on the weekly time frame. Whoops. Did you guys see that? Am I still live? Okay, I'm still live. My computer just went crazy. Alright, so it's still good on the... So it's going up on the weekly time frame, but it's essentially getting into an area where obviously the trend is exhausted. If you guys think that Bitcoin has done anything yet, just wait until the DXY starts coming down. Wait until the DXY rejects from this 450-day resistance. Then you're going to see some real price action. You're going to see some real moves up. So the DXY is doing what we thought it would, right? It's at resistance and it's not having fun. It's pretty much butting its head up against this resistance, right? We're basically forming a strong bearish, not confirmed yet, but it's probably going to be. You're already getting some bearish divergence here, yeah? You're already getting some bearish divergence here. So, you can probably see it even better on the daily time frame. You can see it better on the well, yeah, you can see it well here. No. You can see it on the 4-hourly, but it's not confirmed yet. In any case, we expect it to dump from here. Yeah. So that's the DXY. We already looked at that. Still inversely correlated with Bitcoin. Now let's look at let's look on the smaller time frames. I'm tired of being so zoomed out. I want to see some action. Okay, let's go into our watch list. Let's jump down on the 4-hourly. Let's see. Okay, looks like we're actively putting in some sort of pattern here, a consolidation pattern. Let's see if we can't see anymore. Okay, what is this? Is this a wave? I don't know what this is. Is this a big distribution where you're going to get something like this? I don't know. I don't know. And this is the beauty of zooming out and knowing where you're going and not being so concerned with how you're getting there, because there's so much margin of error. The smaller time frame, these moves can happen and you're not exactly sure what's going on. But if you're well positioned in these markets, you don't need to know, even if you get a small retracement. Just also, generally speaking, if you're looking at any impulse, a proper impulse, you should not ever retrace beyond the 0.618 of that impulse. So let's say conservatively this is the orthodox high. You should be able to hide your stops behind the 0.618 Fibonacci retracement level, and that should then continue if it is truly an impulse. And a lot of these look like pure impulses. So even if you came down, as long as you're behind or you're above the phi ratio, the golden mean, you're fine. Okay, so on the high time frame, if you see a trend and you hide behind the phi ratio, you're gravy. Okay, you don't have to stay on your computer, and be glued to the charts and hope and pray, and watch every move. You don't need a trade like that. It's very hard to trade like that. I've traded like that. I know exactly how it is and what it feels like and how draining it is. And it's not very lucrative. And even I knew a few people who did foreign exchange trading, and they were day traders and they were really successful, but they had really poor health as a result of what they had to do to be successful trading those markets. And that's foreign exchange trading, where you have set hours. Okay, crypto trading is 24/7. There's no breaks. So it's particularly it's particularly hard on the health. Yeah. All right. So just on a smaller time frame, I don't know exactly what this is. Maybe it's some sort of complex sideways correction. I don't know. I don't know. Let's go on that hourly time frame. You no sé. Okay. When in doubt, zoom out. Do support and resistance. Okay. For me, this was... Oops. Let's go on the daily. Okay. So just on the daily time frame, for me, this right here was some sort of resistance. Okay. It wasn't major, like I said yesterday. It's significant. Let's call it significant resistance. I think that's the terminology I used yesterday. So I said I wouldn't be surprised if we could expect some sort of consolidation at this point, and lo and behold, we're getting consolidation at this point. We broke it. What do you do with resistance, significant or otherwise? You retest it. So this doesn't surprise me. Okay, I do expect for us to continue at some point very soon up, and then the next area where I'm seeing significant resistance, again not major but significant resistance, is this area here. I would actually move this to be about here. okay? Because you have this area right here that served as support, this area that served as support, this area that served as support. Yeah, support on the way down, resistance on the way up. Yeah, so both support and resistance here. So that's 3 data points, and that's a trend line or a trend area that's about 533 days. So this is going to be a point of contention for the price. You're not going to just, boom, go up. Very unlikely that you do so, okay? So I believe it's very likely, given that it's a bull trend, what's going to happen is we come up, come back down, and then continue, okay? So I do think that we come through, we run through 30,000 and then retest it as support before continuing. So that's my Bitcoin sort of small time frame analysis. All right, moving on. Cardano, kind of doing the same thing here, right? You're doing the same thing. This was clearly resistance because you're now forming a higher high, and in the past, you have all of this price action right here. Let's be consistent. Right? This is clearly an area of resistance. Again, it's not major resistance, but it's significant. There's support here, support there, resistance here, resistance here. Obviously, when you break it, we went through it. Now we have to retest it. That's what we're doing right now. Do you see? So this is a matter of course. This is an important level, not because, you know, our fancy indicator says it's an important level. It's because we know how to count. It's very simple. You look on the daily time frame, you see that this trend or this level is 268 days long. So by virtue of it being 268 days long on the daily time frame, it's significant on the daily time frame. And there are 4 data points, 1, 2, 3, 4. So you understand that next time price hits that level, you're going to get a reaction. Is it tradable? Absolutely. Should you trade it? I wouldn't, because I don't know what on the smaller time frame what this is going to look like and when it's going to break out. But let me tell you, when it breaks out, it's going to break out, because short of maybe this level, there ain't nothing else, right? So I don't want to miss this breakout. I'm going to stay pat. I'm going to stay in my positions, go to sleep, have fun, live my life. And when it happens, it'll happen. And I'll look and I'll say, oh, cool, that happened, you know? All right, moving on. Bonk, our favorite shitcoin. All right, it's getting ready. It's getting ready. It hasn't done anything yet. Why? Because it's still in our accumulation channel, actually, right? People haven't seen anything from this yet. I don't know where any of my tools are. There we go. Right? This is the accumulation channel. It's still in it. But we understand that it's moving up and out of it, okay? Now, surprise, surprise. We found some resistance at the midline of the channel. What do we know about the midline of the channel? It represents resistance when we're below it, support when we're above it. So we do expect some consolidation here. Once it moves up, retests it, it should continue up, retest the top of the channel as support, and then finally it's free, okay? People think all of this is linear, and however long this took, because this move took 10 days, 12 days, this move took 20 days, then it's going to... No. That's not how it happens. Parabolic growth by definition, logarithmic growth by definition, it grows exponentially. Meaning, you can take long and then not take any time. You can take long and then not take any time. Right? The average trader, the novice trader, speculator, investor thinks everything happens linearly. You gotta wrap your mind around the concept of parabolic growth. So just because the first wave, the first move up took 20 days, doesn't mean that you went 20% in 20 days. Every subsequent 20% move up is going to take 20 days. It doesn't work that way. And if it did, we would all be poor. This beautiful dent, look at that. That was a level of resistance. It broke it to the upside, retested it, and now it's coming. It's consolidating for a move up. Once it starts running, everybody will know. Okay? These really volatile small market cap altcoins are going to put in hundreds and hundreds of percent. You can actually see this effect on the Bitcoin dominance chart. Okay, if you look at Bitcoin dominance and you understand what Bitcoin dominance means, guys, I don't mean to be mean or disparaging, but you gotta call some people out, not because they make mistakes. Everybody makes mistakes. We all make mistakes. But when people, it seems, are almost purposefully deceiving people or just being, like they're being trolls. They're not analysts anymore. They're just trolls, right? Benjamin Cowan, for some reason, y'all respect him as a serious analyst. Maybe because he's nerdy, so you think he must be serious. But look, if you look at Bitcoin dominance and what it did in the past 2 days and say, oh yeah, because he's a Bitcoin maximalist and everything that he says that comes out of his mouth is basically some way, shape, or form has to say how much better Bitcoin is than altcoins, and how Bitcoin is the only investment that should be made, and altcoins are dangerous and risky and a terrible investment. That's essentially, if you want the backstory and the conclusion for all his analysis is the same thing, and that's fine. Stick to your guns if that's what you believe. By all means, and more power to you. But sometimes you just lie, and as you can see on the daily time frame, you can see Bitcoin dominance going up with these two green daily candles. Okay, so based off of that, he said, "Ooh, y'all who are telling me about your favorite altcoins, I told you. Look, Bitcoin dominance is mooning. Bitcoin dominance is going. It's been rising, and basically what this means is Bitcoin is gaining in market cap against altcoins, meaning Bitcoin's going up 10%, these other altcoins are going up 5% or something like that, or 2% or 3% or 4%. Bitcoin in the aggregate is rising higher than altcoins, okay? So in the immediate short term, in the past 2 days, absolutely. But this is a lie, and unless his chart is completely broken and he doesn't have any other time frames, he's lying. At some point, these people are just lying because it's what their brand is built on, and it pisses me off because it's just like there's enough mistruths, there's enough disinformation for people to actively, purposefully mislead people. If you zoom out just even a little bit, even if you stay on the daily time frame and you zoom out, what do you see? That ever since, and people just buy what he says. Just because, like I said, maybe he's nerdy and that's his brand. He's branded as a serious analyst that's conservative, and he's not into trading the small time frames because he doesn't leverage trade. Maybe, and he just buys Bitcoin and waits patiently. People think, oh, this is a serious guy. He must know what he's doing. He's not a degenerate. Dude, guys, make up your own minds, do your own research, and and I wrote this on Twitter, if you listen to people like him and these types of analyses, then it's your fault. He says, and another analyst said this too, I've mentioned this yesterday on Around the Blockchain, like 2 days ago. You should be buying Bitcoin and selling your altcoins because Bitcoin dominance is going up. It's like very, very clearly, unambiguously, for the past many months, however long this is, since June of 2022, Bitcoin dominance has been in a downtrend, okay? And now you've put in this intervening wave up. Is this right here in an uptrend? If you know how to read a chart, you understand that this is a corrective wave. Corrective waves happen in flavors of 3. 1, 2, and what you're getting here is most likely some sort of move up like this, okay? So looks like you're getting some sort of zigzag pattern, or what a lot of people would call a bear flag, okay? So what I'm seeing is, and see right here, you're right at, so you're right at the phi ratio, okay? So what it looks like here, okay, this could be a flat correction, but in any case, very, very clearly, unambiguously, this is a trend, this is a counter trend, whatever this is, however you want to count this. If this is A, B, C, right? This is a counter trend. And what you're getting here, most likely, more likely than not, is a pivot down, okay? It's a pivot from this phi ratio of this trend. And if you know anything about technical analysis, even from a basic level, you understand trend, counter trend, back into the trend. That's what a basic bear flag. So he's telling you to sell your altcoins literally at the bottom, where altcoins are on the brink of destroying Bitcoin for months in an epic move, the likes of which they haven't had. Do you understand? Like, the dissimulation and the intellectual dishonesty, because you have an agenda, that's your brand, that's what you're comfortable with, and that's what you spew. But, y'all subscribe to that garbage, and y'all big him up. Y'all keep putting him on your shows. Shame on you. Shame on you. Shame on you for, because he has a PhD, thinking what comes out of his mouth is good analysis. Because you guys don't take the time to think for yourselves. Do your own research is a thing that a lot of crypto YouTubers, probably amongst us, will say. Do your own research. Everybody loves to say that in this space. Actually do your own research. Think for yourselves. I always say, don't even trust what I say. Verify. Use that as a launch pad for ideas you may want to explore. Think for yourselves. That's the whole point of this crypto shit. It's democratizing finance, democratizing your financial well-being, and thinking about what the money supply means, thinking about self-custody, thinking about what it means to spend $1, thinking about what inflation means, thinking about all of these things critically. Not just buying it hook, line, and sinker. So if somebody tells you to sell your altcoins, and altcoins are all garbage, they're not going to do anything about in Bitcoin, and you look at this chart and you believe it, and you know something about technical analysis. Let's say you don't know anything about technical analysis. Fine. You don't know any better. You don't know how to read a bull market. You don't know how to read a bear flag. You don't know how to read an impulse, a corrective pattern, an intra-wave correction. You don't know any of that. Fine. But then, maybe if you're trading, you should learn a little bit. It won't take you that long. But if you do, shame on you. You never bother to open up the Bitcoin dominance chart and actually check this guy. Who's checking this guy? God. And you put him on your show. This is the thing. Like, all of you guys who do collaborations with frauds, shame on you. Perpetuating fraudulence. And just like we hate on banks and big players that defraud us, right? There's some big influencers that also defraud us. Okay? And I'm not talking about, oh, you are wrong? You call that wrong? You're a fraud. No, it's not about that. Because we've all been wrong. And technical analysis is not easy. Trading is not easy. I get things wrong all the time. It's not about that. It's about seeing something in black and white. Seeing that it's going up. Seeing that it's going down. Understanding it. Understanding that there's no way you can say that Bitcoin dominance is in an uptrend. It's literally in a downtrend. And saying that's an uptrend. Do you understand? Right? I mean, that's just on the daily time frame. Zooming out. Look at it. I mean, you're being kind if you're just, you're limited to the daily time frame. It's in such a downtrend. Consolidation. So this is another impulse. This is more consolidation. Where the hell do you think it's going? If you purchased altcoins up here, guess what? You out traded somebody holding Bitcoin by magnitudes. Okay? That's what Bitcoin dominance is showing you. It's intellectually dishonest to not acknowledge that. Okay? So anyway, that just annoys me because it's like, I love this space. I love, a lot of the analysts in this space. I love the work people do. Again, it's not about they were wrong, so they're frauds. No. It's people point something out to you, right? And it's very clear. They're pointing it out to you and saying, oh, wait, I appreciate your work, but if you notice, you claim that this. Look at that. It's very clearly the opposite of what you claimed. And they're like, no. They refuse to look at it, and that's fine. But that's fraudulence right there, right? Your ego is too big to acknowledge when, you were wrong. Okay, where were we? We were on the daily, and we were looking at... We looked at Cardano, we looked at Bonk, we were looking at Dent, did a retest. Dodo, we're on Dodo. So Dodo is fighting under, this resistance here. I actually want to go down. Okay. On Dodo, so you're fighting under this resistance, but essentially what you're doing is you just broke a resistance, and that resistance is this W. You broke it to the upside. You should retest it as support before you move forward. That's how I'm seeing it, okay? I'm biased. I'm bullishly biased because of my high time frame analysis. Same thing with Dogecoin here. All right? Breakout, retest. Boom, boom, boom. Breakout. It's that simple. I would say that maybe you can see the same thing on Bitcoin. Can you say the same thing for Bitcoin? More or less. It's a shallow retracement. That just shows how bullish it is. Yeah, it's a very shallow retracement here. You see, Bitcoin's so bullish, it's putting in these running flats. Remember what we said about running flats a few days ago? You can see that here, right? Whoops. A wave, B wave, C wave comes. So basically the A wave goes down, the B wave goes up. The B wave overshoots the A wave, and the C wave comes down higher than where the A wave came down. That's what I'm seeing here. But essentially, that is the small time frame analysis. That massive, you're basically retesting. You're retesting this W bottom. That's what you're doing. You see that? Here it's an inverse head and shoulders. Okay, for Cardano. It's a retest of the neckline. That's what it is. Could you trade that retest? Yeah, but why would you? You know? Like, if anything, add to your position. You know what I mean? Like, what, you can get a few, a percentage point, 2% profit. Just add to your margin. Because unless you catch it immediately, you know, you want to be prepared to load up. That's essentially the what I'm seeing throughout the market. Dent essentially did the same thing, except it put in a right shoulder that was higher. So I think the hourly time frame is offers a really good read on the market right now for the small time frame. You see that W pattern, broken, retested, right? Obviously we saw it in Dogecoin, right? Boom, boom. It's a great entry if you haven't entered yet. Not financial advice, but I guess it is. I'm gonna stop saying that. I hate saying that. Like, one day somebody's gonna be like, yo, I invested in shitcoin, you know, ass grab coin, and it's because I heard it on Dean's stream, and he never said he didn't call not financial advice, so, you know what I mean? Like, no, I called non-financial advice, you can't sue me. Like, dude, you guys, if you don't, get the fuck out of my face with that, like, not financial advice. It's just such a thing, you hear it all the time, so you just say it. I'm gonna stop saying it, because I think it's so stupid. Obviously, it's financial advice, but, you know, you take it if you want to, and if you don't. I don't care. I'm not taking money for my financial advice, you know what I mean? But yeah, I would buy. So yeah, I'm gonna start saying financial advice. This is an inverse head and shoulders. That's what I'm seeing. You have these resistances that were just broken and that are being retested. That's what you're seeing in Ethereum right here. These are running flat corrections. That's what I think is happening. Boom. Litecoin, very nice. RSR already starting to go. All right, same thing. W, boom. Whoops. Stray mark. I hate stray marks. Gotta have clean charts. There we go. SHIB, one of my favorites. I love how this trades. It's very volatile, but if you catch it, you're in for it. You're in for a treat. You catch Shiba Inu in the bull market, you're in for a treat. It moves with such verve, with such strength. It's so nice to be on the right side of that trade. Synthetics, already starting. Breakout, retest. That's all there is to it. And because we're in impulse, these are the kind of moves where the price goes and it doesn't come back anywhere close to where it was. So you can buy and never worry about it coming back to that level. Generally speaking. Not always, but generally speaking. Okay? This is a large head and shoulders. Inverse head and shoulders. Right? That is clearly a level of resistance, now resistance turns support. Support and resistance will get you so far in technical analysis. And I didn't realize that. You know, actually, I learned that from Garrett Soloway. Even though I criticize him for not being able to set up his charts correctly, that's essentially all he does. And it works really well on the small time frames for him because he doesn't use a log scale. But, you know, most of what he trades are traditional assets, and they don't move parabolically. It's just once he gets into crypto and starts analyzing crypto on a high time frame, his charts all break. And so that's why he's confused. That's why he's talking about a 12K Bitcoin and stuff like that. He's being consistent and true to his analysis. I think is really wrong, but I think he wouldn't have that confusion had he understood that you can't set up your crypto charts like you set up your traditional market charts on a high time frame. You need that lock skill. It's not optional. But anyway, his use of support and resistance on multiple time frames and looking for those patterns is inspired me to look at the market in the same way. So shout out to him. All right. Inverse head and shoulders, or W pattern, or cup and handle, inverse cup and handle, breakout, retest. That's all it is. XRP. Okay. Zilliqa, you can see it. That W pattern, massive. Whoops. I would say that this support and resistance is more like over here. Actually, this is more like a inverse head and shoulders, right? Breakout, retest, fun starts. Because remember, this isn't just a breakout of this neckline. If you zoom out just a little bit, it's going 4 hourly. This is a breakout of all of this. This is a breakout of all of this right here. So you're breaking out of a very, very high time frame resistance. So do expect massive moves. I think it's going to be a really green weekend. One of those weekends where your favorite coin goes up a few 100%. The daily candle closes and it does it again. And then, you know, people will still be asking, are we in a bull market? And one of the reasons people are still asking, are we in a bull market, is because of that whole 4-year cycle thing. They don't understand that this bull market is going to be so fast that between now and the next halving, we will have had a complete bear market, or a bull market and a bear market. A lot of people think that's impossible. So they're still waiting for 1 year, about a year. They're thinking the bull market doesn't start in earnest for about a year. This is another one. I think I was right the first time, right? This is a level, resistance, resistance, support, support. You're down, break it, retest it as support. That's the read. Simple support and resistance. Theta token. I got into this one. Yeah, I do expect these to continue to run. Just a bunch of sorry. I'm trying to see what this looks like. Yeah, a bunch of inverse head and shoulders, yeah? Break, retest, go. Yep. Telcoins already started to break out, but same thing. Except this retest was of the bear market accumulation. Okay, zoom out so you can see what that looks like. This wasn't just the bear market accumulation. The purple box was both. I used on Telcoin the purple box to designate both the drawdown, okay, and the bear market accumulation. So this is breaking of support or resistance of all of this. This is something like 600 some odd days of resistance. 638 days. Yeah, this is going to expect Telcoin to go up hundreds of percent from here. It might do like 3x one day, 4x the next. Expect to go crazy. It's been prepping for 600 days. 5 waves up, 3 waves down, consolidation, reversal, Expect it to go nuts. And this is when you'll see Bitcoin dominance tumble. When more of these kinds of altcoins start running. Because for 600 days, they've been accumulating, consolidating, going down, right? Matic doing really well. This is clearly a retest of this level right here, right? Or was it? Yeah, let's use the actual, because I can't draw that straight. Let me zoom out for a second. Something like this. Something like this. I see this. No, I can't. I have to draw a line. Just because I want to do it diagonally, I have to do it diagonally. It's not always straight. Sometimes it has to be a little diagonal. Okay. That is what I'm trying to draw. Right here. Okay. So that was resistance. Became support. You broke it. And then there's another one here. Maybe. I don't know. I don't know. This is going up. This is going up. And it's been going up. So. Yeah, it'll continue to go up. It's way above all its EMAs if you're into that. DYDX. Same thing. I see some massive inverse head and shoulders. Something like this. Something like that, yeah. Something like that. Harmony 1? Yeah. Look at the symmetry. Something like that, right? That's all you're in a right shoulder of an inverse head and shoulders. That's it, right? This is the top of the W pattern. You broke, retest, boom. MOVR. Yeah, look at that. Inverse head and shoulders, broke the resistance, retested it as support, and you're on your way. You're on your way. You're on your way. You're on your way. Your high time frame analysis though tells you that this is it. This is that up only price action that you've been waiting for. The type of big money moves that you can really take advantage of to change your life in crypto. You're here. So, you know, do with that information what you will, but that's essentially where we're at. And when you're talking about timing the market, these types of opportunities don't happen every day. Don't get it twisted. Everybody gets into crypto for times like these, for what has happened in the past few months and what is going to happen in the next couple months. Everybody gets into crypto for those opportunities. If you're around, take advantage of them, because they're not something that we see every day. Trust me. Most of the time, price is consolidating. Price is going sideways. Very few, a lot less often is price going to be impulsive to the upside. So, 600 plus days down and sideways, okay? Maybe 60 days up. Do you see what I mean? So that's why it's hard to time the market, because you got to know when those 60 days up, 60 to 90 days up are going to happen to take advantage of them. Inverse head and shoulders, you broke support, or you broke resistance, you retested as support. Okay, that's Chainlink. Chainlink is still in its main accumulation, by the way. Do you see that? It hasn't left the bear market accumulation. This is going to be, people are going to think, oh, Chainlink sucks, it's never going to move. No, this is going to move on its own time. But when it moves, it will move, okay? It doesn't suck. It's just a little slow out of the gates. That's it. Right now, it's found resistance at that midline, which we would expect, okay? It's just now past the midline, retesting it as support. It's going to now matriculate up to the top of the range, retest that, and then go. Okay, so my next target for Chainlink is about $9.50. But obviously, it's not a target for like take profit. No. My next target of where it's going to move, right? Higher time frames, you just let it go. You let it go. Polkadot, same thing. It's one of those that's a little slow to get out of the gates, right? You can also draw a bear market accumulation channel, which we haven't, because this is a relatively new position that I added. This is one of the most recent ones that I added a few days back. Whoops, wrong tool. There it is. And this is the bear market accumulation for this asset. That's not the color. What did we use? This one? Okay, whatever. That's fine. So basically, ever since May, you go sideways, 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 sideways. And then finally, the bull market started here for Chainlink. December 29th. Okay? December 29th. You broke out, retested this midline as resistance, or as support, right? And then started consolidating. Now you break out. Did I say Chainlink? I meant dot. I'm 3 hours into the stream or something like that. It's crazy. But obviously for me, it doesn't feel like all that time because I'm just engrossed in what I'm doing, But I'm pretty sure because I'm hearing the same song at the beginning. Maybe not 3 hours. I don't know. Whatever. It's been a while since I've been on stream. Okay, so I'm expecting this to go up more now that we've been consolidating at resistance. You guys know my thing. You consolidate at resistance, it is not bearish. It's bullish. It's just a matter of time before you break out, and this is the trend that's going to take you up and out of there. So DOT should start running freely because understand that although it's been in bear market accumulation, what it's done in that time is not only broken that high time frame resistance. Zoom out even more to see exactly what I'm talking about. Here we go. The downtrend that DOT has been in since November of 2021 has lasted for 420 days. So in that time that you were going sideways, right, in the bear market, sideways and down, you broke that 420-day trend, retested it as support twice. Okay, so you're like, I own you. This is conquered. And you made your way up through the channel of accumulation. Okay, so all the major resistances, this is a major resistance. This channel is a major resistance, rather. This channel is a major resistance. All the major resistances are now vanquished with this move. Expect DOT to start doing numbers as a result. Key. This one started running. This is obviously, this is one of my spot positions. It's super volatile. Not anything I would ever trade on leverage. But I'm happy to trade it on spot. And I think that it's so low cap and it's so volatile that it's going to do just as well as some of my leverage traded positions. But you can see the type of candles this one prints. It just went up, I don't know how much in the past day. Let's just say the past 1, 2, 3, 4 days, it just put 100% up, pretty much went 100% up. And specifically today, and the day is not over yet, it's already gone up 68%. So most of that was today. Went up 68%, but retraced probably 60% of that, right? Why? Why do we know that? Because that's a wave 2 retracement. Okay. So that's what we're looking at. Actually, let's see. What's it look like? Maybe this is a wave one. Nah, this can't be. This is a series of corrective patterns. This is what we would call a leading diagonal. 5 waves up, 3 waves down, but corrective. 5 waves up, 3 waves down, but corrective. How do we know that that's corrective? It's because 1, 2, 3 candles up, and then so many more than 3 down. You know that this can't be a wave 1, wave 2 situation, and nor can this be a wave 1, wave 2 situation for the same reason. 1, 2, 3 candles up, and then so many more down. So you know that this is zigzag. This is another zigzag. So 2 zigzags in a row, I think, is what we call in regular Elliott wave analysis, people call a 5-3-5-3-5 leading diagonal. I don't think leading diagonals actually exist. I think that people call leading diagonals these zigzags that happen in succession. So there's one zigzag and another zigzag. It's basically 2 different, a pivot here and a pivot there, and then it leads to pure impulsive price action. So I think that's what you're getting here from key. And if you zoom out, actually what we can do is we can make this lower here. Let's see. Yeah, we can make this lower. So essentially what you're getting is a break of this top resistance, this bear market accumulation resistance, and a retest of it in that zigzag, that second zigzag. So you're gonna get pure impulsive price action. All that to mean key, like Talcoin, like DOT, should very soon in the coming hours get explosive price action. The type of price action where you're like, it's up how much? It's up 300%. This is what you can expect. Again, for us to hit the targets for Bitcoin in 2 to 3 months, imagine what altcoins are going to do. Okay. So that is the analysis, guys. Hope you're having a great day. Hope you're well positioned to take advantage of this move. But that's it for me. Take care, and I'll see you tomorrow. Bye.